Welcome back, folks. We have the Dow Industrials down 23, Nasdaq's off 12, S&Ps are down 3.5. Let's go over to our man, Mr. Rob McEwen. Rob, folks, is the CEO, chairman, and chief owner of McEwen Mining. You've heard him here many times on TFNN. It trades under the NYSE as MUX. McEwen Mining does business in Argentina, Mexico, Nevada, and Ontario, Canada. Rob McEwen, welcome back to TFNN.
Thank you, Tom. Pleasure to be here.
I'll tell you, great day to be here. We finally got a big bid on gold and the metals and the dollars going down the tubes.
Gold going up is good. I don't really care for the dollar to go down, but
yeah, well, I guess that correlation is pretty direct, though, right?
Yes, it is.
Yeah, so I'm with you. It's intriguing that since January to now we've gone from 103 to 96. So hey, tell us what has been going on with McEwen Mining. You got a lot of action happening here.
We do. First off, we'll do about 144,000 ounces of gold equivalent this year. It's a mixture of gold and silver.
Okay.
And that'll come in at a all-in cost of cash cost of just under $800, and our all-in cost with sustaining capital will be just under $1,000. So there's a margin in there. We don't have any debt, so we remain debt-free. We have $50 million in liquid assets. We have a project. We're going to be building a new mine, and we hope to get our permits in the fourth quarter of this year and start construction. It'll take about a year to build, and that's our mine in Nevada.
Yes.
Called Gold Bar, and it'll be doing about 65,000 ounces. We just picked up property in Timmins, which is one of the big gold camps in the world.
Yes.
And there are 4 projects up there. Three of them are adjacent to each other, past producers, squeezed between Goldcorp and Tahoe, and very high-grade occurrences. So we're looking to see if we can build on that. But that was about 2.4 million ounces in resources. We paid about just over $20 an ounce in a very prolific camp. Argentina is steady at about 90,000 ounces of gold equivalent a year. Mexico, our El Gallo gold property, it at the moment is nearing the end of its life as an oxide gold mine,
okay.
Oxide ores. We think it has a future for sulfide ores, so we're looking at the options there to continuing it and building an addition to our plant. And just 5 miles away is our El Gallo silver project that was permitted 2 years ago to build, and we said, well, there's no point building it with silver down at $14 an ounce. Let's wait till it gets higher, and we could have a better rate of return. After all, the silver is not going to go anywhere.
Sure.
The price is just moving around, so we thought we'd forego the dilution and the high cost of financing at the time to build a mine that wouldn't be producing much in the way of economics. Wait for a better time.
What does it mean that you go from an oxide gold to a sulfide mine?
What that means, Tom, is the processing of the ore changes.
I see.
So we'll go from a heap leach operation to a mill with a leach cycle.
Okay, cool.
But you have to crush the ore more and process it.
I see. It's pretty amazing. I mean, I see how much silver that you actually get out of these mines in Mexico. It seems like, it seems like there's a never end of silver in these mines, right?
Mexico as a country has a long history of producing silver.
Yes, yes. So if we go up to the Timmins project, right? So
yes.
is the Timmins project a project that you think that you want gold a little bit higher that you're going to tackle, or is this something that you can actually start tackling now?
We think we can tackle it now. There were preliminary economic assessments done on the property several years back, and we used an $11.50 gold price.
Yes.
And they were generating positive returns. And what we're weighing right now is whether we want to start on an open pit basis, mining some of them, or underground. Two of the properties have shafts on them that would have to be dewatered, but they have shafts, and the other two have ramps. So a lot of the development's already been incurred. We'd have to add to it, but we think we would mine it and custom toll it at one of the mills in the Timmins district.
Now, I know in the past, you've basically held back, you haven't held back the production, but when you have produced, sometimes you hold that gold off the market for a bit. Is that something that you have been doing, or you look to be doing, or how has that been working?
I started doing that when I was building Gold Corp.
Yes.
And we have done that from time to time here at McEwen Mining as well.
Okay. Yeah, it's always a little bit, it's not tricky in an up market, right? It's I know.
Tricky in a down market. And it's also when you're building mines, often you don't have the additional cash flow, so
yes,
you're selling until you get the other production going.
And what do you think right now is driving the price of gold and silver? It's still, what's amazing, Rob, is that, we get calls all the time, of course, in the gold, but people call them Bitcoin. Like, I'm having a hard time comprehending. Bitcoin today is $2,900. It's like, really? It's like, okay. I can't touch it. I can't feel it. But guess what? So what do you think's driving the price of gold right now?
Probably Bitcoin a bit.
Yeah. Yeah. Right.
Just people are looking for a currency where they can put it in, and they don't feel the government's going to debase it. And Bitcoin might be easier to trade or more technologically oriented for certain groups.
I can see that. Since I've had you on many times, and, time flies, of course. It has been amazing that it seems that most currencies across the world have actually come down. It's not like one currency coming down. People are always talking about, okay, us against the euro, us against the yen. Well, the yen, the euro, they've all come down to lower prices. I mean, do you think that that's going to continue?
Absolutely. They've been debasing their currencies and adding more debt. We're in this big experiment that we've never seen the likes of before in the world.
Yes. Where
all the countries in the world have decided we want to get the consumer back, so we're going to put more money in their hands and get them to spend. But then it's going the wrong way. They should be trying to get people to invest in productive assets that create jobs, that provide a tax base for the country.
Yeah, and it seems that, at the beginning of this, people said people were going to get addicted, but they are addicted. We're all addicted, man. I mean, guess what? It's like, I know debt's bad, and it's bad for the country, too. And it's like, okay, so as soon as they go up on the rates, it's like, okay, what's going to happen with the market, right? Rob,
yes.
Can you stay another segment?
Sure can.
Awesome.
Thank you, Tom.
Okay. Stay right there, folks. We're coming back with Rob McEwen. He's the CEO, chairman, and chief owner, which is 25% of McEwen Mining. McEwen Mining trades on the New York Stock Exchange as MUX. Dow Industrial's down 32. Nasdaq's off 16. S&Ps are off 4.5. We're going to be right back. Welcome back, folks. We have the Dow Industrials up 32, down 32. Nasdaq is down 18. S&Ps are off 5. We have gold up 12.50. Silver is up 9 cents. We're talking with Rob McEwen, the CEO, chairman, and chief owner of McEwen Mining. And, when we talk about debasing currency, it seems that that's right across the world, right, Rob?
Yes.
Yeah. So, where do you think that that whole deal, not that would end, but would come to fruition and would actually get more push inside these metals markets?
Well, right now, everybody seems very complacent with the belief that central banks can control interest rates, they can control the market.
Yes.
And so we've seen bubbles in the real estate market, in the stock market. And that's the place to be because there's no yield. It's the only way you're going to make some money.
Yes.
But people are jumping in, and they don't seem to be assessing the risk. And once they start doing that, they're going to be looking for some hard assets, and gold's just starting to get that traction again.
Now, you've been in this business a long time, right?
Yes.
Yeah. So isn't it intriguing, you know, like I started the Gold Report in 2002, and it blows my mind. We're in 17, right? And it is amazing that you can still, to me, you know, when I talk to gold with someone, you know, people say Bitcoin or something else, says, do you understand that it takes 10 tons of dirt to get an ounce of gold? I mean, it still seems such a value. You know what I'm saying? As to what you have to do in order to get an ounce of gold out of the ground.
It's a lot of effort. And curiously, when you talk about 2002 and today, if you looked back to 2002, gold was going up in dollar terms from 2001 to 2005, but really not moving in any of the other major currencies.
Yes.
And today, we have gold going up in other currencies, but not the dollar.
Okay.
And there came a point in 2005 where it started moving up in all currencies. And I think we're approaching that point now, where when it starts moving up in dollar terms, it's already moved up in the other currencies. Then you get a movement around the world.
That's a great
gold.
Yeah, that's a great point, because I've looked at that a lot, and I've looked at the aspect, like even, you know, when the UK got hit, you know, they had quite a rebound in the market. I'm talking about their broad market, but actually when you put it in U.S. dollar terms or you put it in the pound terms, well, you know, it hasn't really gone up that far. You know, and if we stay with that concept, what happens? You know, we know gold gets bought and sold in U.S. dollars, right? You know, the mine in Mexico, the mine in Nevada. Well, the Nevada would be great because the bottom line is that you get dollars for dollars. The peso at one point, you know, it went from that 18 to 22, but it's right back to 18. So when you talk about expenses, how does that work in the context of you have a mine, you get paid dollars, the currency conversion? How do you work with that?
You pay in local terms.
Okay.
So as gold's moved up relative, as the dollar's moved up relative to the peso,
yes,
your revenue is higher.
Right.
But your costs are fixed in local currency terms. So your margins are It does depend, however, on if you have a contract miner in Mexico. Many of the contract miners have their contracts priced in dollars rather than pesos.
Okay.
So there's not as big a benefit in that case. And we happen to have contractors.
Right. Well, actually, that's pretty good because if you know your cost on both sides, it's actually better. I mean, sometimes on a longer-term basis, right? I mean, sometimes I know you can score, you know, if you're in the right country. But I remember the last time that we had the huge run, you know, from like 2003 going even, you know, up to 2007, what people had a hard time comprehending is that, you know, some of the Canadian miners, they weren't making as much because the Canadian dollar went up so high, right?
That's right.
Yeah, so it's going to be intriguing watching this whole thing shake out. It definitely feels different. This run here seems to feel different than the one, you know, I mean, we had from 2012 to 14 to 15. That was a decent counter-trend bounce, but it actually feels that this is a little bit different, maybe even going back to that 2004, 2005 level.
It does feel different. It's because more of the world is doing just what we were worried they'd do.
Yeah.
That is more debt, more increasing the money supply. It's just gotten so large, it's hard to comprehend the impact.
Yeah.
The dollars that are being pushed out by the Fed or by the other banks, central banks around the world to get their economies going are enormous, and there's just not a lot of benefit coming from those dollars. It's taking more and more dollars to move the economies of the respective countries.
Yes. And, you know, what's intriguing, folks, is that what Rob's talking about, you know, you just brought up a huge point, because I remember on the not the first run, but the run from 2002 to like 5, you saw a lot of articles about that, but you don't even see those articles anymore, like how much, folks, it takes like $1 to push the economy higher versus 10 or 20 years ago, $1 to push the economy higher. I mean, it has the value of about a cent because of the fact that there's so much debt out there.
Yes.
Yeah. Well, listen, it's always a pleasure having you on. So I know, so I got to hear this. So give me a projection, price of gold.
Let's go for $2,000.
Yeah, we're going to have that, man. We're going. I can see that. There's no doubt about it. And you know what's going to be so intriguing? Watching how this place trades out, because, you know, today, Rob, we're coming into this 1,300, and it's barreling in there. We get 250,000 contracts right now in the futures, and you're laying right underneath it. So, I mean, it looks to me that, you know, we built cars up for quite a while here.
Well, you know, I'll give you an example, Tom. Our goal is to get into the S&P 500.
Yes.
And there's only, the only way you can get into the S&P 500 is by being an American company. We're Colorado Incorporated.
Okay.
So there are only three companies. So that first of all, that means 99% of all the precious metal producers in the world can't get into the S&P 500.
Well, that's a great goal, because you already pay a dividend, right? I mean, that's pretty amazing, you know.
There's only one gold stock in the S&P 500 right now, and that's Newmont.
Okay.
There are 3 companies that have market caps of just under $1 billion to about $1.5 billion that are the most likely to be able to get there one day, and that's Coeur, Hecla, and ourselves.
Well, that is a beautiful thing. Rob, you have a great one, a safe one. We can't wait to have you back. And this is Rob McEwen, folks, Chairman, CEO, and Chief Owner, 25% of McEwen Mining, trades on the New York Stock Exchange as MUX. Rob, thanks so much. Have a great one, a safe one.
Thank you, Tom.
Thank you.
All the best.
Stay right there, folks. We'll come right back.